What we're going to talk about is scanning for overlays. Overlays are essentially looking at whether it's a price or an indicator, putting them on top of each other on a chart so that you can see where they cross over, where they overlap. And the reason you want to do that is it can help with finding signals or can help clarify signals. So one example that I'm going to show you all today is what's called the double smooth simple moving average. And the reason you would want to do that is sometimes the 20-day simple moving average is a little choppy, or maybe it's not as clear of a signal to when to buy. Usually the signal is when the closing price crosses the 20-day moving average. That's one signal to go ahead and buy a stock. But sometimes it's not as clear because it might be hovering up and it might be moving up and down, very volatile on the chart. And so if you look for stocks that have been double smooth, it kind of filters out those that are like noisy, and it'll help you clarify those that are, that are pretty confidently above the 20-day moving average. So let's go ahead and jump right into this. And you can do that by just opening a new scan. And you're not going to be able to see this on a chart because you can put a 20-day moving average on the chart, but you won't be able to see a 20-day moving average of a 20-day moving average, which is what we're going to code for. You're only going to see a 20-day moving average. But what you should see is that the 20-day moving average that you see is pretty strong. Like, you're not going to see a closing price that's going to be like above it, then below it, above it, then below it, above it, then below it, not bullish. You're going to see that it's strongly above the 20 days. So let's go ahead and code for that. So we want the closing price to be greater than the 20-day, right? But we want to do 20 days, right? But we want to do 20 days of the simple moving average of 20 days, right? And the default isn't volume. The default is going to be the closing price. All right, we don't need this. So we're going to go ahead and run the scan, and I'll show you what I mean. So I'm going to filter out the closing prices so we don't get penny stocks on our list. And we'll go ahead and do a reasonable number. So let's look at ABMD. Okay, ABMD is an example here where it's very smooth, right? The blue line is the 20-day moving average. So the 20-day is actually quite clear. It's not choppy like the actual price points that you see. It's been smoothened over so you have a clear sense of how it's moving. And that's really helpful if you're looking for trends as well. So that's one example. Let's look at another one. We'll look at AA. All right, here's another example where it's been smoothened out. When it smoothens out, there are less ups and downs. So for example, if we look at the EMA, which is the green line of 5 days, we can see that it's pretty smooth in and of itself, but it has its bumps, right? So you could also double smooth the EMA. But you can see here with the 20-day that it's very smooth, and it is above in this case, but this one is like almost they're converging. All of the different price points, they're converging, and so you would want to use other indicators to confirm whether that means that it's going to go on a significant uptrend or if it's possibly heading for a downtrend. So hope this was helpful. We're going to spend the next few days talking about other kinds of overlay of indicator scans, but I just wanted to open us up with this one.